Hello everyone. In this session we will discuss about the topic forfeiture of shares issued at premium. Issued at premium means when the company issued the shares at a price which is above its face value. So the first condition under this topic is when the premium on forfeited shares become due but it is not received. So we'll do a question related to this situation. So the question is, S Limited issued 5,000 shares of rupees 100 each at a premium of rupees 10 each payable as follows. On application rupees 30, on allotment rupees 40 including premium, on first and final call rupees 40. All the shares were applied for and installments received on due dates with the exception of the allotment and first and final call on 100 shares. These shares were forfeited and reissued as fully paid at the rate 105 per share. Pass necessary journal entries. So now according to the question, number of shares issued is 5,000 and application money is rupees 30. So the total amount received on application will be 5,000 into 30 which is 1,50,000. And entry for receiving the amount due on application will be bank account debit to share application account and the amount is 1,50,000. Next we will transfer the application money to the share capital account. The entry will be share application account debit to share capital account and amount is 1,50,000. Next payment is due on allotment. So as we know, allotment money is 40 out of which rupees 10 is premium money. So the total amount due on allotment will be 5,000 is the number of share issued and allotment money is 40. So the total amount due on allotment will be 5,000 into 40 which is 2 lakh. So as we know, total allotment money is rupees 40 out of which rupees 30 is the actual allotment money and 10 is the premium money. So the amount which will be transferred to the capital account will be rupees 30 into 5,000 that is 1,50,000 and the remaining amount that is rupees 10 which is a premium money, it will be transferred to the premium account and the amount which will be transferred to premium account will be 5,000 into 10 which is 50,000. So entry for allotment money due will be share allotment account debit to share capital account to securities premium reserve account. Share allotment money will be debited with the amount 2 lakh as the total amount due on allotment was 2 lakh. Share capital account will be credited with the amount 1,50,000 and securities premium reserve account will be credited with the amount 50,000. Now according to the question, all the shares were applied for an installment received on due dates with the exception of allotment as well as first and final call on 100 shares, which means the applicant holding 100 shares has not paid the allotment money as well as final call money. So the number of shares applicant holding is 100 and allotment amount is rupees 40. So the applicant who has not paid the amount on allotment will be 40 into 100 that is 4,000. So as we know, our allotment money, total allotment money due was 2 lakh out of which 4,000 has not been received. So the amount we will actually receive on allotment will be 2 lakh minus 4,000 that is 1,96,000. Entry for receiving the allotment money will be bank account debit to share allotment account and the amount is 1,96,000. Next payment is due on first and final call. The number of share issued is 5,000 and first and final call amount is 40. So the amount due on first and final call will be 5,000 into 40 that is 2 lakh and entry will be share first and final call account debit to share capital account and amount is 2 lakh. So as we know, the applicant holding 100 shares has also not paid the first and final call money. So the amount which is not received on first and final call money will be 100 shares into 40 which is 4,000 and the first and final call amount due was 2 lakh out of which 4,000 has not been received on first and final call. So the amount actually received on first and final call will be 2 lakh minus 4,000 which is 1,96,000 and entry will be bank account debit to share first and final call with the amount 1,96,000. Now in the question it is given the applicant holding 100 shares, his shares has been forfeited. So the entry for forfeiture of shares will be share capital account debit, securities premium reserve account debit, to share allotment account, to share first and final call account, to share forfeiture account. Now here securities premium reserve account has been debited. Why it is debited? Because at the time of forfeiture of shares, when the amount of premium is not received, we always debit the securities premium reserve account. Share capital account has been debited with the amount 10,000 as the total called up money excluding the premium is rupees 30 on application, rupees 30 on allotment and 40 on first and final call. So the total called up amount is rupees 100 and the number of forfeited share is 100. So 100 into 100, that is 10,000. Securities premium account is debited with the amount 1,000 as the premium money is rupees 10 and the forfeited share is 100. So 10 into 100 is 1,000. Share allotment and share first and final call account has been credited because the amount on allotment and first call money on 100 shares has not been received. So the number of share forfeited is 100, allotment money is 40. So 100 into 40 is 4,000 and number of forfeited share is 100 and first and final call amount is 40. So the amount will be 40 into 100, that is 4,000. Share forfeiture account has been credited because we have received only application money. So number of share forfeited is 100 and application money is 30. So 100 into 30 is 3,000. So now 100 shares which were forfeited are reissued at rupees 105 per share, which means it has been reissued at premium because the called up amount is rupees 100 and reissue amount is rupees 105. That means the shares has been reissued at a premium of rupees 5 per share. And entry will be bank account debit to share capital account to securities premium reserve account. When the shares are reissued at a premium, then the securities premium reserve account is always credited. So bank account is debited with the amount 10,500 as the number of reissued share is 100 and it has been reissued at 105 per share. So 100 into 105 is 10,500. Share capital account is credited with the amount 10,000 as the number of shares reissued is 100 and the reissue price excluding premium is 100. So 100 into 100 is 10,000. Securities premium reserve account will be credited with the amount 500 as the number of reissued share is 100 and the premium amount is rupees 5. So 100 into 5 is 500. At last, we will transfer the credit balance remaining in the forfeiture account to the capital reserve account. So the entry will be share forfeiture account debit to capital reserve account. And the amount is 3,000 as at the time of forfeiture, the amount which was credited in forfeiture account is 3,000. So 3,000 will be transferred to the capital reserve. So we have completed the question based on the condition when premium on forfeited shares become due but is not received. So in the next session, we will discuss the second condition. That's all for today. Thank you.